Big changes are coming to the payments world. This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Growth Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. Visa has announced a major overhaul of its commercial card data standards through its Commercial Enhanced Data Program, or CEDP. Under the new rules, merchants will need to submit accurate, invoice-level transaction data to qualify for reduced interchange fees. For companies that get it right, the savings can be significant, but for companies that aren't ready, the risk is significant. Joining me today to help us understand what this means for businesses and why CPAs need to be paying attention is Eric Cohen, CEO at Merchant Advocate, a leading advocate for businesses in the credit card processing field and a longtime NJCPA partner. Welcome, Eric.
Thanks, Don. Great to be here.
All right, so let's get into it. Visa is calling CEDP one of the biggest changes to commercial interchange in years. Can you explain in practical terms what CEDP is and why Visa is moving away from the old system?
Yeah, absolutely. So CEDP really is discussing business credit cards and optimization of business credit cards. So in the credit card processing world, when you accept a business credit card, a merchant and a business owner can pay 3 or 4 different rates on the same card on the same transaction. The difference between the rates are significant. It could go from 1.5% to 3%. And what really happens there is the more data that a merchant or organization pushes through the system, tax amount, line item data, commodity code, there's about 12 different things that could be pushed through the system. The more data they have, the lower the rate. And that's been going on for years and years and years. And over the years, people have circumvented the system. They're putting in dummy data. The processors are putting in dummy tax amounts, which for the CPA world is really not a good thing to hear. So when someone's not taxing something, there is a tax field and people are putting in tax amounts there. Now, that doesn't go to the IRS, but it does go to Visa and the banks. So over the years, Visa has accepted these transactions with incorrect formats, incorrect data, and given lower rates. Well, about a year ago, back in, and we're talking January 2025, actually before that, Visa came out and said, we're no longer going to accept dummy data, and we're no longer going to accept data in the wrong format. Once they put that into place, and they started in April as far as adding fees for CEDP, and in October 2025, they changed the rules. Now, by changing the rules, a lot of organizations that had data that was in the wrong format will see a 40% or more increase in fees.
Wow.
It's a tremendous increase. And, you know, Don, some of these organizations, whether it's a mom and pop, or we've seen organizations that do $1 billion in volume, they're not adding dummy data. They just have the wrong format. They have the wrong decimal point. They have the wrong comma. Now, I really, I appreciate what Visa is doing. I agree with what they're doing, 100%. It's got to be real data. It's got to be in the rules. If you follow the rules, you get better rates. If you don't follow the rules, you get penalized. Right? I mean, pretty cut and clear. What I don't agree with is how it's been instituted and how merchants are finding out about it. And I will tell you, there are some very large organizations that just now are realizing this is going on, and it's going to blow their budget for next year.
Wow. All right. So from your perspective, we're serving our role, informing our members about this. So from your perspective, what specific impacts should controllers, CFOs, and public accountants be preparing for?
When they're looking at the merchant services bill, and we find that most people look at it and they don't look at the details, but they're looking at is their overall rate, their fees divided by their volume. If they see in the month of November, and I say November because October was a partial month, but when the November bill comes out in December, If they're a B2B client, business to business client, that's really where it affects most people. They should look at their fees divided by volume, or what we call net effective rate. And if it jumps 0.10, 0.30, 0.40, okay, that's a red flag. So that's really what they need to look at. They're not going to understand the details. They're not going to understand all the different codes. Credit card processors, as we all know, make this merchant statements very complicated and hard to read,
Hmm.
and almost impossible for even a CFO. Well, some of the smartest CFOs don't understand all the coding behind the scenes in credit card. But overall, they should start looking for a significant increase in fees over the next, 30 days into November and December 2025.
Okay. So you mentioned earlier the risks of either waiting or not abiding by these new rules, higher interchange rates, failed validations, and you mentioned the increase in processing costs of up to 40%. What are the most common system or data problems that could cause a business to fall out of compliance under CEDP? I mean, it sounds like it's a combination of maybe somewhat negligent, but maybe some of it's also deliberate, and then there's probably a lot in between.
Right. Well, I mean, the biggest one that's deliberate, let's say, is putting a tax amount into a field where there's not really tax, right? And again, that should scare everyone that's listening to this because, you know, that's borderline on fraud, right? I mean, you don't want to put in a number saying that you're collecting tax and you're really not. So I think that's the biggest one that's deliberate. And it's not the businesses doing it. The credit card processors are auto populating a tax amount without realizing they're not taxable transactions, right? Years ago, they put a message on a statement and saying, listen, we're going to put a tax amount in. It's going to lower your cost, but we're going to share in the savings for that, which I don't like as a processor. I mean, our model is shared savings, but we're not the processor, right?
Right.
As a processor, they're putting this amount in and they put the statement message out that no one reads saying, if you don't charge tax, call us and tell us. If you don't call us and tell us, we're going to assume that you charge tax. Now, again, it doesn't go to the IRS. It's just a placeholder field. So that's the deliberate one. The ones that are not deliberate are the equations. For example, if you have a price per unit and a unit number, the equation should be the price per unit, let's say $10 times, if you sold 10 of them, should equal 100, plus tax of $2 or $8 should equal 108. What we're seeing is mismatched alignment on that. We're seeing someone that says, okay, the base amount is $10. I sold, 10 of them, and there's tax of $8, and the total amount is 100 instead of 108. And it's just not mapping the fields correctly. And we see that a lot in larger organizations that have like a ERP system or some sort of switch system that actually connects to the credit card processor. So the tech team knows that there's fields to be passed. It's just that they mapped it wrong, or maybe the shipping zip code versus the billing zip code is mapped to the wrong field. So it's those inconsistencies. Now, the big problem with all this is, how do you find out? Right? Other than, hey, we had an increase in rates. Now, you have an increase in rates. What do you do at that point? And that's where I don't really agree with how this is all handled, because you have to be able to contact the processor. The processor has to know exactly what you're talking about. So you have someone that's working in a call room that picks up a phone and you say, hey, my rates went up. They're going to go, well, Visa changed the rules, and it's just pass through costs. And that's what everyone's going to hear. Well, what we do for our clients is we actually ask for certain reports from the bank and not the processor.
Okay.
And by getting those reports, you actually get the exception fields, you get all the information. They tell you exactly what's wrong. And if organizations do this now, they can fix it and they will start getting some refunds back. If they wait, they're not going to get the refunds back very long.
Okay. Is that something that CPAs could also be asking of the payment processors or merchant services providers to ensure their clients or their own organizations qualify for the lowest possible interchange rates? Are there other examples of what they should be talking to
Um,
this processor about?
yeah, I mean, Listen, a CPA can call the processor. We find that most do not. The problem is if a CPA or business calls a processor, they're going to get an answer from someone in a call center. And that call center is not specifically designed to handle these in-depth questions. Now, if they call the processor and say, hey, we heard about CEDP, how do we know if we're qualifying? They may get the right answer. Now, as you know, we've been doing this for almost 20 years now, and we have a team of experts. Even when our team calls and they speak to someone, all of a sudden we're getting the wrong answers from the call centers. And we know exactly, we're saying, okay, we understand what you're telling us. That's not what we're looking for. We need a supervisor. And then you need to understand exactly how to ask for the CEDP report. And then when it comes, you now have to learn how to fix it. So our recommendation is hopefully some organizations have experts, right? Obviously, we're always here to help. So, we offer that to all of your members, right? But it is complicated. And I think they're going to spend a lot of time and get in the runaround. But overall, they need to ask for the CEDP report or the CEDP status and see if they could kind of move around from the typical call center person to maybe a manager or someone higher up.
Okay. Well, it sounds like a great first step for anybody who listens to this podcast and then wants to take action. Before we went live, you had alluded to some other news from your world that we might want to cover in another podcast. You want to tease that a little bit?
Yeah. So if you're LinkedIn, if you're on LinkedIn and you're connected to anyone in payment processing, or you're hearing in the news something like a $30 billion or $30 million, I think $1 billion settlement, some huge settlement with Visa, MasterCard. And there's a lot of news now that says a business could surcharge certain types of credit cards, or for all of us that use rewards, because I know almost everyone on the call here and listening to this, we all like our rewards and our points and our airline miles and our cash back and everything else that we get. A business is going to have the right to turn those cards away. I don't believe it's going to happen for the mass amount of small mom and pops, mid-sized companies, maybe the big box stores, possibly. But if you think about, you go to a restaurant, you throw your rewards card and the waiter comes back and says, sorry, sir, ma'am, we don't accept that card. Probably not going back, right?
Right.
But there's that just landed. And then there's this idea that interchange or the cost of accepting credit cards is going to go down 0.10%. A lot of information. It's true, but the benefits may not reach the business owner. And there's a lot of noise going on right now. And we're kind of weeding through it going, okay, that's great. But the real story is, and we're going down a path of this is what's really going to happen. Are you going to see the reduction? Are you not? Is it going to even pass through, final approvals? I believe it's very close, if not there, but there might be a judge that has to go there. So for everyone listening to this, if you're hearing that news, there's a lot of information behind it that's not in the public eye right now.
Well, we'll definitely have to have you back to talk about those issues. And I am always amazed when we have conversations with you and Merchant Advocate. You'll mention something to us and I'll think to myself, how do more people not know about this? So we always appreciate your time when you come on the podcast to talk about these issues. As we mentioned in the open, Merchant Advocate's a longtime partner of the NJCPA, and also always a good resource when things like this come up and you're not really sure where to turn. So we really appreciate your time today, Eric.
Yeah, thanks, Don. And the partnership with NJCPA has been phenomenal. You guys are great. Love the association and your members, and really appreciate you having us part of this. And anything that we can do for you or your members, please let us know.
Really appreciate it. Thank you. Thanks for listening or watching. Access the show notes for links to learn more about the new Commercial Enhanced Data Program, as well as the latest issues impacting New Jersey CPAs, businesses, and the economy.